Since March 15th, the Canadian dollar has had a relatively straight line rally against the US dollar, resulting in an over 3% gain at current levels. Now, through most of that time, the loonie had resumed its normal correlation with the price of crude, but that relationship has seemed to loosen in the last few days as crude broke and the loonie mostly maintained its directional move. Now, some traders and analysts may argue that since the overall level of crude remains high, it will remain supportive of the Canadian currency despite short-term fluctuations. Now, something else has changed in recent days as the Bank of Canada's deputy governor said that the BoC was ready to act forcefully to address inflation. The market interpreted that comment as an indication that they were planning on hiking rates by 50 basis points in the next meeting. Of course, the expectations for the Federal Reserve continue to evolve, and over the last month, as the market is now pricing in 3 consecutive 50 basis point hikes. If a trader believes that elevated oil prices and this new Bank of Canada hawkishness will support the loonie in the short term, they could express that opinion using CME Group micro futures. Now, it's important to remember that a trader can use 3 different sizes of futures, the standard, the mini, and the micro in the Canadian dollar, but choose according to your risk tolerance. Now, an example of using the micro, they could buy that micro June Canadian dollar futures contract at 0.8035 and target the spring of 2021 consolidation level at 0.8300. A stop for this trade could be placed at 0.7950 below the psychological level of 0.8000. This trade could make $265 and risks $85 if you're stopped out of your level. Now, if a trader believes that the recent strength in Canada is overdone, perhaps because oil could soon correct, a trader could express that opinion by selling the CME Micro June Canadian dollar futures contract at 0.8035 and target the December lows of 0.7725. A stop for this trade could be placed at 0.8150. This trade could make $310 if your target is reached and risks $115 if you're stopped out at your level.